BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Hello everybody, welcome back. So sorry I've not been around, been camping with the kids, and now we've all come back. We've got a cold, how predictable. So let's get started on what it is that we can or cannot see on this beautiful Monday. So it was an eventful weekend, I suppose, after that dump that we had, and since then we had a massive move, and this is Bitcoin, but obviously altcoins rallied significantly. There's a 10% bounce on Bitcoin from wick to wick, only to get rejected on a 200 exponential, basically. So that's unfortunate, but it's not the end of the world. It's not a death cross yet. We've got plenty of time to have another go at this. The area being 58,260 basically, and that is just the first step. 10 exponentials approaching pretty significantly, and that'll hit there probably this time tomorrow. And in this area is like a massive resistance. If you were to break above there, then you've got the next big problem being a Bollinger Band Center or your 21 exponential, which are both teamed up at this area now, and that's coming in at 60,900. Last time we hit that, massive rejection, and again look, 200 exponential, massive rejection. So there's not really anything other than a downtrend that we can see, and just like anything else, if you want to see a downtrend finish, you've got to see some kind of bullish divergence, some momentum telling us that actually this continuous trend is losing momentum, and we are now starting to see that on the daily. I mean, it's not massive, but it does exist on the daily only. If you're looking for a major bottom, you'd really want to see that on a weekly. And so that is the worst case scenario, because the weekly is not really presenting in that kind of way. But we'll have a look in a bit anyway. So you've got your bull div here, you've got your bull div here, and again, it's ever so subtle, but it does exist. So there is a chance that the daily has already put in a bottom. And again, it's just a chance. It's not a guarantee. It's just a chance. This is all that we're looking at. There is no crystal ball here. There is nothing that we can stand back and say, well, this has happened, and so this is definitely the outcome. No, that's not how it's going to work. But there is a chance, and the chance is reasonable to suggest a bottom is in. Same thing's going on over here with the 4 hourly, and it's a bit more pronounced on the 4 hourly. You can see the bullish divergence brewing. Big one here, and then another big one here. There's only 2 drives, but they're quite pronounced, and so with that, you could maybe make the case that, all right, maybe this is it. Maybe the bottom is in, at least on the 4 hourly and on the daily. And if we do go down to make another low, and those are still intact, you know, the bullish divergence is still intact, then yeah, then you would say, all right, fine, okay, so we've got 3 drives now, and that's better than 2. 3 is usually the key number. If we do edge down a little lower, we've still got this 50 exponential, which is coming in between 51 and 52,000, and that might be able to print us some bullish divergence. This doesn't have to happen this week, by the way. We could go up, maybe all the way up to the top, 65,000, and then a rejection from there. That would be a crystal clear rejection area. Bollinger Band Center, top of this sort of major zone of significance, really, and then a rejection from there to come back down and maybe a little lower over time, giving us the bullish divergence that we desperately desire on the weekly. So again, you know, we're in the middle of the summer now. I've been saying it since December. We're likely to see, very likely to see, and I was willing to bet, you know, with my pretty much my entire, all the profit that I made from last year into this year, that this was going to happen, and it is happening now, and entering into coins on the way down to build up those portfolios. So nothing has changed for me based on what I've said since December, especially running up into March, April, where I was really getting ready for a larger consolidation. You know, the cash. I've been sitting in loads of cash basically. So it is happening, and again, we're in the middle of the summer now, so, you know, potentially we could have ended it, or we could only be halfway through, but things don't just keep going down forever. There will be bounces along the way, and we are halfway along, so this could be an area where we do see a bit more of a dead cat bounce, continued rally, and the main thing would be to see if we can break above 65,000. We could see 65,000 this week. based on the bullish divergence, based on the overextended wicks, based on the fact that we've come down so far so fast. It's been a pretty fast pullback since the last time we hit this major resistance now, down 26%, which in Bitcoin's terms is not enormous. You know, that's not huge. You know, I'm sure a lot of you have been around crypto before. This is not your first rodeo here, but 25%. 26% is it's like a baby step, really. That's nothing. It's like a hiccup for Bitcoin. But for altcoins, it's definitely different. It's definitely different. We measure something like SHIB right from the top all the way down to the wick low, 71%. Somebody bought that there, didn't they? Somebody did that. But, I mean, again, even looking at this, you know, we've got money flow index, bull div, not really anything on the RSI. So altcoin's still relatively weak in comparison to Mr. Bitcoin. Let's have a think about Ethereum then. So Ethereum did exactly the same as Bitcoin, broke the 200 exponential, retested it and rejected back from it, and still created a higher low from the wick. But when we're looking at any divergence on this daily, it doesn't exist. There's nothing there on the daily. So this is a Bitcoin scenario. It's a Bitcoin driven market. We do have a little, no, we don't even have anything on the 4 hourly here. So altcoins still dangerous. They can benefit from Bitcoin's movement, but it's still dangerous. So let's have a little look over at the dominance chart, which again, the dominance chart is positioned on the daily in a very bullish way. Still hanging around this major support here, around, we'll just call it 55% dominant, and likely to bounce from here, to be honest. Now, if we move it to the weekly, the main thing that we were thinking of on the weekly is that if we do, for whatever reason, break down below the 54.5% dominance, which is the 21 exponential, we head down towards a golden cross retest, which from here, you know, if we break down here, this would be your alt rally, which is still absolutely on the cards. You know, we've been talking about this on the Patreon for 2 or 3 weeks now, really, that you might get yourself a nice alt rally. We won't call it season, but it'll be a nice alt rally only to just be reabsorbed by Bitcoin again back down at these lower levels. Until we see a breakdown or a closure on a weekly below here, we can't expect that. And if we do start to trail down from here, this is the area, 52% dominance. Finally, we'll just have a look at the total 2, which actually it has managed to close back above this accumulation zone. So we had a wick down below it and we're back above it now. The wick so far coming from the 50 exponential moving average. And again, this is something that I've made a whole video about 3, maybe 4 weeks ago. I urge you to watch it, but really all it is a simple fractal that's easier to see on a log scale. So we just get a bit more of a bit more context of what it is that we can see here. And you know, the time of this fractal is your bear market into bull market, and it's not perfect. It just shows that there is some kind of symmetry across the volatility. Again, it's not perfect. But it gives you an idea of where we're looking to head towards into next year, which is why I've been saying, you know, I'm happy to accumulate in this area. Now, the fact that we've closed back within the accumulation zone is one thing. We did wick below it, so the lows could be in. And I'm not just saying that. I know that everyone wants to hear that sort of thing, but the lows could be in. And if they're not, it's not a big deal for me, because I would expect at some point we rally back out of this and up to new highs on the total 2. So this is altcoins having a good time. And you know, the risk versus the reward favors the reward at this level, and especially when you look at it like this is a golden cross retest. It's only the 50 exponential, but it is a golden cross retest. And if we do come down lower, we've got another opportunity here, here, and here. Obviously, the price of altcoins would be significantly wrecked at that point. Nobody, absolutely nobody, apart from myself, would probably want to buy them, because most people only want to buy when this sort of thing's happening, and would never dream of buying on something that looks like this, especially if it comes all the way down here. No one would want it, but I would, because it's a counterintuitive market. Obviously, just like all markets. If you want to get the biggest bang for your buck, you've got to put it in at a lower price. Now, the problem we're having, obviously, is trying to make educated guesses as to where the lows are in, which is why the dollar cost average strategy appears to me to be the right way to go about it. Because, look, if you're looking for a fast turnaround, you may not get that. But if you're looking for a turnaround generally and moving up to new highs on the total too, it's still worthy of building the portfolios with every major move down, whether that's a 10 or 20% move down from altcoins at this or from this level. Again, yeah, I know that it doesn't feel good for a lot of people. Most people are going to be overexposed or have no money at all to apply to the market. But me, let's see, little baby steps. The first dollar cost average I did was only about 5% of the cash that I had, and that was a good. Well, I mean, that was when my first entry points were quite a lot higher than where they are right now. So, yeah, those first ones are probably down a good 20 or more percent from that. But again, it was only a 5% entry point. From then, with every major move down, I ramp it up a little bit. And at this point right now, I'm 50% in the market, 50% in cash. So, you know, I'm quite happy to be that exposed. That's quite a significant amount of exposure I've got to altcoins at this point now. You know, if you might think, oh, you know, 50%, you know, I've got 50% cash. Why aren't you buying with the rest of it now? Because it obviously could come down lower, and with the lower prices, I want to make sure I've got cash available for that. And for me to be fully exposed, I'll probably only be 80% in cash. That's about as bullish as I ever get. You know, there's always going to be a 20% available, or a large cash position available for what could be black swans or significant scalpy trades. Let's just say something really serious happened. You see a massive pullback, massive dump, massive crash. Then that last 20% or that last little bulk of cash that I've got it goes in for what could be a really nice swing trade, you know, for a couple of days or whatever. Maybe even as much as 50 to 100% gain on those sort of things. But I'm highly disciplined, and so for the most part, that just stays in cash. So, you know, when I'm fully exposed, I'm at 80%. So you can see how confident I am in my overall analysis and my projection here and what I'm looking to expect between now and, well, from what we can see, roughly around September next year, which is where I'm looking to assume a top form in the market. Anyway, other than that, there's not much more to say. It is Monday. It's relatively boring on Mondays. Stock's still pushing new all-time highs. Dixie's sort of hanging around in a bit of a no man's land. We'll just have a quick look at that before we go. It doesn't know whether it wants to break or to pump. So we really don't know what it wants to do at this point now. It's sitting on the 50, on the center of this Bollinger Band on the weekly. So the Dixie itself is in what I would consider to be make or break territory for the higher term timeframes. The weekly is still bullish with its trend, but there's no pump signals, nothing like that on the weekly at all. The daily is basically below moving averages, heading down towards what looks to me like 104.5, which is a golden cross retest, 200 exponential and simple. So just be wary when you see the Dixie hit that level, and a breakdown from that level would be amazing, and that probably would cause the turning point for Bitcoin and everybody else, because the Dixie at that point will have made a pretty clear cut decision that it wants to keep going down, and it's at that point where you actually zoom right out and go, okay, well, if the Dixie's going to come down from here and break down from here, we're talking at least 101.4, maybe even 100 flat, and if we see losses of those areas, we might be looking to the bottom of the trend line, back down into the mid-90s. But this is a weekly, and that's where I would expect to see the Dixie over time anyway, between now and September next year. Whatever we do around this area is, you know, your guess is as good as mine. The only way it's not going to go is left, but it's likely at some point to hit this area down here at some point over the next the next year to 18 months or so, and that's where the bear market will begin for crypto, and that's where the problems will start. So just remember that, you know, people now are probably going to be calling for huge moves up or huge moves down, but really it's probably just going to be looping around this area, and at some point come down to this area, and where it's only when we get down here where we start to get very skeptical, especially if it corresponds to the right sort of time, sort of the back end of next year. That's where we start to think, all right, no matter how bullish we are, we might all be up 1,000% on our spot positions. We might be all rolling in the cash at this point right now, and somebody, if not many people, are calling for the Dixie to die completely and fall into the abyss, and us to all get way richer than we've ever been before. But it's when you hear those sort of comments that usually the opposite will happen. And so for the moment, I think the Dixie is just going to fanny around in this area, but it will edge down towards and below 100 once again, probably next year. But until then, it's just going to be up, down, side to side, zigging and zagging. Most of the time, going to be influenced by what the old men say at the table at the Fed. But sometimes it can move through all kinds of other reasons. There's lots of old men and old women that talk about currencies in all central banks around the world, and they do have an effect on the Dixie, obviously. But at the moment, the Dixie is, on a technical basis, looking like it could break down from this support. It does look like it could break down from the support, but only to get picked up from a lower level, which is why I'm suggesting most likely to fanny around in the centre of this range. But look, we're in a rising channel, which has been going on since 2010, and a rising channel almost always breaks down eventually, but we could be talking another 5 to 10 years before we see that breakdown. This is not going to carry on in this with this projection forever. It will eventually break down. I'd love to see it break down, to be honest with you, but if we do come down to it, expect a bounce. Don't expect a breakdown from it. Expect a bounce. If you break down from it, then great. We have an extension in our trading environment. But don't bet the house on the fact that we'll be bouncing from there, because if we did bounce from there, it is likely to move back up to the top of the range, which would mean that this is going to see the Dixie at some point over the next 2, 3, 4, 5 years back up to 120. This is going to go against everything that seems to be buzzing around about the BRICS nations and the death of the dollar and stuff like that. There's no death of the dollar at the moment. The dollar is still dominant and probably will be dominant for quite a significant period of time. So I know that people like to watch stuff on YouTube, and there is evidence that the BRICS nations are going to have a decent run at trying to beat the dollar, and that's fine. Yeah, it is what it is. But right now, on the technicals, we're going to fanny around in the middle and probably see Dixie hit those lows over the next 18 months, where I would imagine we should be thinking about, limiting our positions, to say the least. Right, I'll leave it with you there. I'm going to have myself a nice lem sip and probably a nice layer in the bed. You forget how comfy beds are after you've been camping. Oh my god, I don't know what that. It doesn't really feel like a holiday, does it, when you go camping? Or it certainly didn't for me. But it dawned on me that this is the first time I've actually been in a tent, relatively sober. I used to go, festivals all the time. I used to love all that. And I never remember being so uncomfortable in a tent, but I was completely inebriated. I was on another planet. No wonder I could barely feel my body most of the time. So I was sitting or laying in a tent, I'm not cut out for that. Kids enjoy themselves though, and that's what the main thing. That's what it's all about. But anyway, that's enough about that. If you want to join the Patreon, there's links in the description below. It's at the beginning of the month, so you get a good bang for your buck. It's only £7.50 for a full month, or you can get a discount if you want to take on the 12 months. Other than that, though, hope you have a nice day. Take it easy.